Greetings everyone, my name is Yong, matrix number 284880. Today, I will talk about the consequence of internal and external variables on the credit risk of HSBC Bank Malaysia from 2017 to 2021. First, let's talk about the introduction of HSBC Bank. HSBC Bank is a British multinational bank and financial service holding company, found in 1865. The bank is divided into three corporate groups, which is commercial banking, global banking and markets, high net worth, and private banking. In 2020, it merged its retailing banking and wealth management divisions with global private banking to form wealth and personal banking. HSBC Malaysia introduced digital account opening with a 24/7 self-service kiosk. Their strategic focus on accelerating capital transfer to regions with high returns and sustainable advantages, supporting cross-border banking flow and targeting mid-single-digit revenue growth. And they priority fees and insurance revenue and invest heavily in Malaysia, which presents the biggest opportunity for HSBC. In this study, based on the problem statement, HSBC Bank experienced a surge in customer costs following the 2020 payment gateway incident. To protect reputations and credit risks, the bank should improve customer service, address security issues, and manage credit risks, followed by research objective, which to investigate the consequence of internal variables, external variables, and also extraprice special variables and macroeconomic variables on the credit risk of HSBC Bank. Next, in literature review, in the dependent variable, which is credit risk, it is known as leaders assume a specific kind of financial risk when granting credit to a borrower. And also, credit risk is the probability that a borrower will default on their loans. And also, leaders can mitigate credit risk by examining borrowers' creditworthiness factors such as current debt burdens and income. Continue with Chapter 3, which is our methodology. We are using 5 years of HSBC Bank's annual report, which from 2017 to 2021. And next is our data analysis. We are using the SPSS to get the descriptive statistic, p-value test, model summary, correlations, and ANOVA findings. And followed by our model, we are having three models, which is the correlation and coefficient of internal factors to credit risk, the correlation and coefficients of external factors to credit risk, and lastly, the correlation and coefficient of internal and external factors toward credit risk. Continue with Chapter 3, which is our methodology. We are using 5 years of HSBC Bank's annual report, which from 2017 to 2021. And next is our data analysis. We are using the SPSS to get the descriptive statistic, p-value test, model summary, correlations, and ANOVA findings. And followed by our model, we are having three models, which is the correlation and coefficient of internal factors to credit risk, the correlation and coefficients of external factors to credit risk, and lastly, the correlation and coefficient of internal and external factors toward credit risk. Next, from the descriptive statistic of internal variables, we can see that the mean of credit risk is 2.89% and the standard deviation is 2.13%. The standard deviation of credit risk means that the bank may be exposed to fluctuations in credit risk. Moreover, 0.58% is recorded as the mean of loan loss provision, and there have 0.4% for standard deviations. However, the mean of loan loss provision in HSBC Bank was obviously lower than the mean of conventional banks, which is 9%. HSBC Malaysia Bank is suggested to allocate a lower percentage of bad debt reserves to cover potential losses on non-performing loans based on this situation. Furthermore, the mean of debt to asset ratio is 0.86 and 0.67 of standard deviation, as the result shows that HSBC Bank's asset is more than debt. Following is the descriptive statistic of external variables. From the table, we can see that the external factors that are macroeconomic variables of HSBC Bank. The variables of gross domestic product, which is GDP, the mean is 4.5. Inflation rate, which is the mean of 1.36. Interest rate in the 2.55. External rate is the mean of 4.16. Yield curve with the mean of 3.919. And the reserve money with the mean of. Coming with the correlations table, we can see that they have three levels of correlations with credit risk. First is strong correlation with credit risk, which is as referred to the table of p-value test, there are almost half of the independent variables are statistically significant toward credit risk, while the remaining independent variables are non-statistically significant toward credit risk. As referred to the table of model summary, we can see that from the first, which is internal factors, as predictions are REG, CAP, ME, and liquid. Following with the second table of model summary, which is external factors as predictions of standard deviations, reserve money, and yield curve. Lastly, the table of model summary shows the internal and external factors as predictions are M1, CRR, and exchange rate. Based on these three tables, we can see that the ANOVA of the first table is the internal variables, which shows the overall regression model is statistically significant. However, the second and the third ANOVA table indicate the overall regression model is not statistically significant. At the end of this research, I will conclude that HSBC Malaysia Bank's credit risk is primarily affected by the internal variables, which are REG, CAP, ME, and also liquid. This result is consistent with Pearson's R correlation results, which is positively correlate with credit risk. However, there are certain limitations that might affect the accuracy of the finding in this research. The small samples of only 5 years annual reports from a bank that required in the study limit knowledge and skills of the researchers, are the limitations that might not extract the data properly. Thus, this research report is not intended to be an accurate representation of Malaysia's banking and banking system as a whole. Thank you. That's all for me.